This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
U.S. crude oil inventories rose sharply last week amid a decline in exports, while gasoline and distillate stockpiles fell, the Energy Information Administration said on Wednesday. Crude inventories rose by 7.7 million barrels in the week ending July 25 to 426.7 million barrels, the EIA said, compared with analysts' expectations in a Reuters poll for a 1.3 million barrel draw. Crude stocks at the Cushing, Oklahoma, delivery hub for U.S. crude futures rose by 690,000 barrels, the EIA said. Crude futures edged lower following the surprise and large build, but then recovered. Brent crude futures were trading at $73.08 a barrel, up 57 cents by 11:06 a.m. Eastern Daylight Saving Time, 15:09 GMT, while U.S. West Texas Intermediate crude futures were up 55 cents at $69.76 a barrel.
Jet fuel exports from South Korea, China and Southeast Asia to Europe likely hit a multi-year high in July as traders shipped out excess regional supply to cash in on higher European prices, according to ship tracking data and industry sources. The Asian exporters are set to ship 600,000 to 775,000 metric tons, 4.728 to 6.107 million barrels, of the aviation fuel to Europe this month, data from Vortexa, Free Trade and shipping sources showed, mostly from China and South Korea. Vortexa puts the volume at nearly a 3-year high while trade sources said it's the highest in 5 years.
Moving on to the top news in the energy sector.
The U.S. Treasury Department announced fresh sanctions on Wednesday on over 115 Iran-linked individuals, entities and vessels, in a sign the Trump administration is doubling down on its maximum pressure campaign after bombing Tehran's key nuclear sites in June. The sanctions broadly target the shipping interests of Mohammad Hossein Shamkhani, the son of Ali Shamkhani, who is himself an advisor to Supreme Leader Ayatollah Ali Khamenei. According to Treasury, Shamkhani controls a vast network of container ships and tankers through a complex web of intermediaries that sell Iranian and Russian oil and other goods throughout the world.
Premiums for ESPO blend crude oil loading from Russia's Kozmino port in late August to early September for delivery into China have held firm as buyers seeking to meet robust demand ignore the threat of increased U.S. tariffs, Ford traders said on Wednesday. Trump on Monday shortened a deadline for Moscow to make progress toward a Ukraine peace deal or face secondary tariffs of 100% in 10 to 12 days. This set the deadline for Russia at August 7 to August 9, while ESPO cargoes loading in September are being traded. Next, we have the top news in metal markets. Copper demand is rising faster than the industry anticipated, driven by billions of dollars being invested worldwide to modernize and expand power grids for the digital and clean energy revolutions that need vast amounts of electricity. Meanwhile, supply from major producers including Chile and the Democratic Republic of Congo is constrained by a lack of investment in new mines, setting the stage for a prolonged period of high prices. Some analysts predict copper prices will hit records above $12,000 a ton before the end of the decade, an increase of 23% from current levels around $9,700 a ton.
Iron ore futures prices declined for a second straight session on Thursday, as weaker than expected July factory activity data in top consumer China raised demand concerns. The most traded September iron ore contract on China's Dalian Commodity Exchange traded 1.44% lower at 786 yuan and 50 fen a metric ton, as of 0230 GMT. The benchmark September iron ore on the Singapore Exchange was 0.75% lower at $100.95 a ton, as of 0220 GMT.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures slipped on Thursday, snapping 2 straight sessions of gains, weighed by rival edible oils while concerns over rising production and sluggish export demand added further pressure on prices. The benchmark palm oil contract for October delivery on the Bursa Malaysia Derivatives Exchange slid 28 ringgit, or 0.65%, to 4,250 ringgit, $1,000, a metric ton at the midday break. Crude palm oil futures traded lower, tracking weakness in the Chicago soybean oil and Dalian palm oil market during Asian hours, said David Ng, a proprietary trader at Kuala Lumpur-based trading firm Iceberg XSDNBHD.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.